As we gear up for 2024, the freight market is facing uncertain times. This poses significant impacts for owner-operators and small carriers. I'm Caroline, your trucking business professor here at the Bobtail Help Desk, and my goal is to help your trucking business thrive. If that sounds good to you, subscribe to the channel. Let's take a look at the current scenario, delve into some trends, and look at some practical advice for owner-operators and small fleet managers who are navigating these challenges and opportunities ahead. Okay, so what are we looking at in the current freight market? Well, in November, the Outbound Tender Reject Index, or OTRI, saw a rebound. This is a hopeful sign for the spot market, according to a FreightWaves carrier update. However, according to a Journal of Commerce analysis, rates were down by 4 cents per mile in November compared to October. So what explains these seemingly contradictory data points? You can learn more about the cycles of the freight market in a previous video we did, but here are 4 areas of interest that might shed some light on where we are seeing things headed for 2024. First up, overcapacity. Everyone seems to agree that there are still too many trucks on the road for the amount of freight that needs to be moved in the current market. The problem of overcapacity has 2 possible solutions. Carriers downsize or go out of business, pulling trucks off the road, and or freight volumes increase to soak up the extra capacity. The current overcapacity is self-correcting as carriers leave the market, but it's a slow bleed. This is likely due to the immense profits carriers reaped in 2021 and 2022, which helps them stay afloat in downturns. The FMCSA reported that the number of active motor carrier authorities dropped by over 16,000 from December 2022 to September 2023. This is a 4.5% decline in motor carrier authorities, but the volume of active MCs is still far above where we were in the pre-pandemic market. Another indicator of the decline in carrier capacity, C.H. Robinson added 4,900 carriers to its network in Q3 of 2023 compared to 11,100 in the same quarter in 2022. One area where capacity is not slowing down is private fleets. Companies like Amazon, Dollar General, and Walmart have reportedly increased their private fleets in recent months. In fact, this is likely part of the reason why truck orders remain strong despite freight market conditions. So what does this mean for owner-operators and small fleet managers? Well, you certainly don't need me to tell you that the conditions for operating your business have become more difficult in the last year. Things are particularly difficult for those who entered the industry in the last 2 years. You're likely still paying off equipment, which puts a significant dent in earnings. Carriers with paid-off equipment or older loans with lower interest rates have an advantage for riding out the downturn. However, the expansion of private fleets bodes well for people putting a pause on their own businesses to take company driver positions. The next trend is that brokers are struggling. Convoy was the highest profile of broker shutdown, but more are happening every week. Almost 1,500 brokers went out of business between December 2022 and October 2023. You can learn more about the Convoy meltdown on a previous video. But more brokers are shuttering their doors, and this means more invoices are going unpaid. That leads to carriers not getting their money on time to pay for expenses and putting their businesses at risk too. One way to protect yourself from this growing trend as a carrier is to learn to read brokers' financial health metrics, including credit ratings and days to pay. For those factoring with us at Bobtail, the credit rating we provide on brokers gives you a full picture of their financial health and payment history. The threat of unpaid invoices is a daunting one for small carriers who don't have the legal or financial resources to pursue long collections battles. The factoring team at Bobtail works tirelessly every day to collect on the outstanding invoices, often following up dozens of times until payments are made. This allows carriers to spend more time and attention on getting better rates, delivering more loads, and building strong relationships with their customers. We do have another video and article on our blog about what you should do as a carrier if a broker refuses to pay. There are really important tips in there. Go check it out. Okay, moving on to the next trend, that fraud continues to be rampant. Fraud has been an increasingly damaging issue for everyone in the freight industry. Not only does it lead to devastating losses for carriers, but it damages the working relationships between carriers, brokers, and shippers. It poses a particular challenge for newer carriers who are both more likely to be targeted by fraudsters and least likely to be trusted by brokers and shippers. Those with fewer than 2 years of experience on their MCs face high insurance costs and low levels of trust from customers. In a loose market like we have today, brokers can be more selective about who they work with. Insurance companies can also choose their customers more carefully, raising the barrier of entry. This trend makes it even more important to legitimize and professionalize your trucking operation, no matter the size. Taking measures to ensure your customers' peace of mind needs to be priority, and it doesn't take a lot of money or resources to do it. We have a whole other video and article on how to avoid fraud in the trucking industry and legitimize your business. But here's a quick summary, a few tips for you about how you can do that right now. First, prepare a stellar carrier packet and provide documentation to brokers proactively. Also, buy a corporate email and website domain and create a simple website with essential information about your business. Next, get your VINs listed on your certificates of insurance. They may not do this automatically, but it's something you can request your insurance company include on those certificates. Finally, get a physical business address. Don't use a PO box or virtual office. This can raise a red flag to brokers. I know I sound like a broken record here, but we have a whole video and article on creating stellar carrier packets. Go check it out. Okay, let's look at some other economic indicators that can help us understand the freight market. The trucking industry does not operate in a silo. Larger economic forces are always at play. For example, an uptick in imports arriving to the West Coast means busier ports and more demand for trucks to bring that freight to distribution centers. Consumer spending trends also impact the outlook for trucking. 2024 trends include a focus on experiences and well-being, contrasting with the lockdown-induced consumer spending on physical goods. Despite this, retail sales and inventory are predicted to grow as inflation comes down, according to an Economist Intelligence report. The construction industry can also be an indicator for the freight industry. Things are generally looking good for construction due to funds expected from new legislation passed in 2021 and 2022, according to an article by Deloitte. Construction industry leaders are hopeful that new infrastructure for transportation, clean energy, and manufacturing will give them a boost in 2024. This bodes well for trucking, particularly for carriers specialized in oversized loads and experienced in hauling construction materials. Another indicator is the PMI, which is a measure of domestic manufacturing. Unfortunately, the PMI in November 2023 was 46.7, meaning a contraction in the industry for the 13th month in a row. If you're liking this video, please give it a like and subscribe to our channel for more trucking business insights. All right, let's move on and see if we can find evidence for a rebound in spring of 2024. It's clear that a recovery in the freight market will happen eventually. The question is, when? According to an article in the Journal of Commerce, shippers are being urged to lock in rates in Q1 of 2024 because brokers say rates will be on the rise starting in March. If this plays out, it could push shippers into the spot market, raising rates. Some industry leaders are convinced we will see an uptick in rates as early as Q1, while others have much more conservative outlooks. Historically, seasonal trends would point to a slower start of the year. Q1 is usually the lowest part of the year for trucking, and there doesn't seem to be much evidence to contradict that for 2024. If you're wondering why there are so many contradictory indicators for the freight market right now, a quote from Jason Miller, professor of logistics at Michigan State University and Journal of Commerce analyst, might help. He said, "It comes down to the fact that conditions in trucking are not universally as bad overall from a pure demand standpoint and pricing standpoint as folks have conveyed. Basically, just because trucking in general is bad right now doesn't mean it's bad for everyone." Yes, it's always important to follow up on news of your industry and the general economy. More information is better. But it's all about what you do in response to those conditions that will make or break your business. Carriers that focus on the factors within their control will have a much better chance at making it through this freight recession and reaping the rewards of the upturn. Okay, so what can you do, the small carrier, to prepare your business for 2024? These factors include financial discipline, relationships with customers, implementing technology to streamline operations, and legitimizing their business. If you're looking for specific ways to take your trucking business in a different direction, here are some ideas. First, negotiate with service providers. If you've proven to be a reliable customer, you may have some leverage to ask for better conditions or prices with dispatchers and insurance brokers, especially if you have a couple of years under your belt as a business owner. Second, learn to dispatch yourself. Dispatching services can be really valuable, but they charge a significant portion of your revenue. Booking loads is your primary source of income, and therefore a dangerous thing to outsource exclusively. Finally, consider specialization. Hazmat haulers, oversized hauling, flatbeds, and reefers tend to be more resilient businesses in downtimes. You might consider getting an additional endorsement on your CDL or paying for your drivers to do so. More generally, if you're not already doing these things, here are some actions you should be taking. First, know your cost per mile. Knowing your numbers is the first step to improving them. We just did an event on this very topic with Trucker Calculator. Go check out the recording in our feed. Next, foster relationships with customers. Send them a handwritten holiday card. A little bit goes a long way. Explore load management tools that can give you a competitive edge. We recently did an event with True TMS. Go check that out if you're interested in their tool. Next, focus on professionalizing your business to attract the right customers. Also, get control of your cash flow and your expenses. A reliable factoring company like Bobtail can be an important partner in times like these. Give us a call or visit our website, bobtail.com. Finally, take every opportunity you can to learn. Our Facebook group is open to small trucking business owners, where you can get your questions about the industry answered in real time. We also post invitations to all of our events on that Facebook page. Also, consider heading over to our website and subscribing to our newsletter. Every Monday, we compile everything we've done here at the Bobtail Help Desk in one easy-to-use place. I hope you found this video useful. If you did, please subscribe to our channel and give this video a like. And let me know in the comments below what you think is going to happen in the trucking market in 2024. And I'll see you next time at the Bobtail Help Desk.